Hello everyone, welcome to EduTap and welcome to Finance 360-degree session. In today's session, we are going to discuss two very important news articles. The first one is regarding the SEBI that has issued new rules for monitoring the intraday derivative positions, as well as there are the new limits that have been notified that we are going to discuss. Okay, so here the important points are there that you need to understand and remember from the examination point of view. So we will be discussing these limits, we will be discussing the facts that you have to remember from the examination point of view. It is important from the phase 1 as well as from the phase 2 perspective of RBI grade B examination. Okay, now coming to the next news article, that is IPFA has launched the Niveshak Didi phase 2. So what is this phase 2? All of this we are going to discuss in today's session. Okay, so give me a thumbs up if I am clearly audible and visible to all of you and everything is fine. So this is your two news articles that we are going to discuss in today's session. Okay, but before starting with the session, let me inform you that there is a Teachers' Day sale that is going on, that is valid till the end of the day today, that is 6 September 2025, where you are getting flat 74% off for all the regulatory body courses of EduTap. So if you want to get a systematic course, if you want to get the systematic material for your preparation, then you can get the course here at flat 74% off, and you can get the RBI grade B, IFSA grade A, IRDI grade A, NABARD grade A, SEBI grade A, or the combo courses you can get at flat 74% off using the code GURU74. Okay, so it is a good time for you to get the course because there is a huge off that is going on. So if you were thinking of getting the EduTap's course, so this is the time for you. Okay, so let's get started now with the session. The first news article is regarding the framework for the intraday position limits monitoring for equity index derivatives. Okay, so the name itself seems a little difficult, a little like typical to understand, but do not worry about it. We will understand everything one by one. Okay, so based on feedback from market participants and further discussions in SEBI's Secondary Market Advisory Committee, as well as consultations with the market infrastructure institutions. The market infrastructure institutions are the stock exchanges, okay, the depositories, the clearing corporations. So stock exchanges like NSC, BSC, there is depositories like NSDL, CDSL, clearing corporations are there also, CCIL and such. Okay, so based on feedback that the SEBI has received from the market participants and further discussions in the SEBI's Secondary Market Advisory Committee, as well as consultations with the market infrastructure institutions, SEBI has set out specific rules regarding position limits for index options. So there are index options. Okay, you must have heard about the future and option market in the stock exchanges. Okay, so there is future and option market that is allowed, and if you have a IND Money, or if you have Grow, or if you have Zerodha or any other stockbroker app, so they provide you the future and option platform to trade. Okay, so there is index options. There are index options in which there are position limits, or we can say limits that have been identified and notified by the SEBI. Okay, so we will discuss about it more, but first of all, let's understand about the options and what is this index option. Okay, so how many of you know about the options? Option is a derivative, right? Option is a derivative. Now derivative, they derive their value from underlying asset, from some underlying asset. Now this underlying asset can be any shares, it can be the underlying asset can be any commodity also, it can be foreign exchange, it can be, or foreign currency we can say, or it can be interest rate. Underlying asset can also be index. Any example that you can give me of index, any example that comes in your mind, any example for index? Have you heard the term index? So any example for index? Bank Nifty is there, right? Bank Nifty. Then there is Nifty 50. Then there is Sensex. Okay, as well as recently there was also the BSC Insurance Index. Okay, Insurance Index that comes from the BSC 1000 Index. Okay, so there are various index. Now derivatives, they derive their value from some underlying asset. Okay, it can be shares, it can be commodities, it can be foreign currency, it can be interest rate, or it can be index also. So options, now what is option? Option is a derivative that is deriving its value from some underlying asset, that is getting its value from some underlying asset. So option this is a contract that is getting its value from some underlying asset. Now here we are talking about index option. So you can understand that this option is getting its value from the index value. The underlying asset is index. So the option is getting its value from the index value. Okay, any of the index, it can be Bank Nifty, Nifty 50 or such. Okay, now what is option? Option, like if you are getting this contract, if you are getting the option contract, you get the right but not the obligation to trade, or to settle. Okay, so if you are getting the option, if you are getting the option contract that has the underlying asset index that is deriving its value from the index value, so this option provides you the right but not the obligation to trade in the index. Okay, it provides you the right but not the obligation. So that is the option derivative. Any confusion, anyone? Yes, very good. Clear? So there are call options and buy option. There is call option and buy option. Call option, let's say I am purchasing a call option. I am purchasing a call option. So call option provides the buyer. So I am buying the call option. So I have got the right but not the obligation. I have the right. If I want to trade, I will trade. If I do not want to trade, I will close the position. Okay. So basically, call option gives the buyer of the option. So I have bought the call option. So I have the right but not the obligation, to buy. Okay, to buy the underlying asset. Similarly, if I have the put option, not buy option, sorry, put option. So let's say I am buying a put option. I have bought the put option. So put option gives me the right but not the obligation. It gives me the right but not the obligation to sell the underlying asset. Got it? So this is the idea about the call option and put option. Both the options, basically they are the derivatives that are deriving their value from the underlying asset. So derivatives, they are basically contracts that are deriving their value from some underlying asset. So option, this is a contract that is deriving its value from the underlying asset. That is the index here, that is the index value here or index points here. So the call option is there and put option is there. Call option gives the buyer of the option the right to buy, right but not the obligation to buy an underlying asset at a set price by a specific date, while a put option gives the buyer of the option the right but not the obligation to sell the underlying asset at the strike price by the specific date. So this is the call option and put option. So here when we are talking about index option, I hope now you understand that we are talking about the options, that is the call option and put option that has the underlying asset index that is deriving its value from the index value. Okay, so this is the idea that the framework has been released by SEBI for intraday trading that happens. So now let's say that in the morning I have bought a option, I have bought a call option for the index. Okay, that has the underlying asset, that is some index. So in the morning I have bought the call option. Now there is intraday trading that is happening in the option. That means by the before the end of the trading period, today, I have to close my position off. I have to square off my position. Either I have to do the trade or I have to cancel it out. Okay, so basically intraday means that at the start of the trading hours, I can have the option, I can buy the option or I can sell the option. At the before the end of the closing of the trading period, I have to square off my position, I have to close off my position and such. Okay, so this is the basic idea that intraday trading happens in the index options, index options. So there are the position limits that have been notified. Position limits means limits have been notified, that how much of the index options an entity can buy or sell. That is the basic idea. Okay, again we will discuss about it more. So after discussions and deliberations in the Secondary Market Advisory Committee of the SEBI has decided to introduce an intraday monitoring framework at the entity level for index options. So there are the limits that have been notified at the entity level. That means for each entity, there are the limits that have been notified, that how much they can trade in the index options. Okay, so this is the idea. So the aim So intraday, now you understand that occurring during the course of a day. At the start of the day, you might have bought the option or you might have sold the option. By like before the end of the day, you have to square off your position. Okay. The aim, now for the monitoring limits or for this monitoring framework, there is a aim. What is the aim? So aim is to maintain market stability while still allowing the active participation from different types of market players. So basically, the aim here is to maintain the market stability and to not allow the disorderly trade that can create the destabilization in the market. So to stop the disorderly trade or to stop the manipulation in the market, okay, Yukta, basically means that you have to close your position. If you have a buy position, either buy or close your position. Okay, that means you have to close the contract. Like you have to get away with the contract, sell the contract off. Okay, so that is square off. You have to close your position. Okay, got it? Any other confusion? Any other confusion, anyone? Okay. So these whole guidelines are only for the options. So only options we are going to discuss. Okay. Yes. Yes. So intraday trading happens. Okay. So at the start of the day, you have bought the contract. You have bought the call option. Now, before the end of the day, you have to either you have to go through the contract. You have to, like, for the underlying asset, you have to go through the contract, or you will have to sell off the contract, or you have to close your position. Basically, square off your position means close your position, get out of the market. Okay, if you do not get out of the market yourself, the brokers will like force you to close your position off. That is the intraday trading. Okay, occurring during the course of a trade. Got it? Okay, nice. So basically, this is the idea. Now the aim is to maintain market stability. The framework has been brought. Now a complete framework has been brought for the intraday position limits monitoring, for monitoring. The framework has been brought for monitoring the intraday trading that is happening in the index options. These guidelines are only for the index options. Okay, so framework has been brought for monitoring the intraday trading that is happening in the index options. Now the aim of this framework is to stop the market manipulation, or to reduce the market manipulation, and to not allow the disorderly trade, so that the destabilization of the market do not happen. Market manipulation should not happen, disorderly trade should not happen, so that the destabilization of market do not happen. So the aim is to maintain the market stability while still allowing the active participation from different types of market players, including liquidity providers, the hedgers, the speculators, and market makers. So it's not like that the SEBI wants to curb the index option trading. No, the SEBI wants to allow the index option trading. The SEBI wants to have the liquidity in the index option trading. The SEBI just does not want the destabilization of the market. SEBI do not want the destabilization in the markets. Okay, that is the idea. So the aim of this framework is to maintain the market stability while allowing the trading in the index options, or while allowing the active participation from the different participants in the index option. Now there is something known as long and short position. Long and short position. So long position basically means the one that is buying the options. Short position means the one that is selling the options. If I'm buying a call option, or if I'm buying a put option, so that means I have a long position in options. If someone is selling the option, if someone is selling the call option, or if someone is selling the put option, that means the person has a short position in options. Clear? So an investor has a long position when they buy or hold the call or put option. They own the right to buy or sell the security at a specified price. So if I buy the option, call option or put option, I have the long position. investor has a short position when they sell or write a call or put option. That means when someone is selling the option, they have a short position. Okay. So the buyer of the option, if I'm buying the option, I have the right but not the obligation to go through the contract. Okay. The one that is selling the option, they have the obligation to go through the contract. Okay. So if I'm buying the option, I have a long position. If I'm selling the option, I have a short position. That is the idea. Now, intraday net position. So now we are coming to the framework. Now we are going to discuss about the limits. And now when we discuss about the limits, this long and short position will be discussed again. So intraday net position limit for each entity shall be 5,000 crores. So basically, in the intraday, the trading that is happening in the index option, that has the entity wise limit of rupees 5,000 crore in the net position limit. Net position limit means, let's say I have the long position of 8,000, I have the short position of 2,000, or let's say 3,000, 4,000, let's say. Okay, so long position means I'm selling, I'm buying the options. Short position means I'm selling the options also. Okay, so what is the net position that I have? Can anyone tell me the net position? How much of the net position do I have? Net position is 4,000 crores. Okay, let's say I have a long position of 10,000. Or let's say I have a long position of 9,000 and I have a short position of 4,500 or 5,500. Now what is the net position that I have? So I have a long position of 9,000. I have a short position of 5,500 crores. So that means I have a net position of, here I have a net position of 3,500. Okay, so intraday net position limit for each entity shall be 5,000 crores. Okay, so that is the intraday index option net position limit, that is 5,000 crores, as against the end of the day limit of 1,500. So end of the day limit is 1,500 crores, but intraday net position limit is 5,000 crore. Got it? Any confusion, anyone? Next is intraday gross position limit. The gross, that means total position limit for the long position is 10,000 crore, and total intraday gross position limit for short position is also 10,000. So gross position limit is for each entity. For each entity, the gross position limit shall be 10,000 crore separately, both on long and short sides. Okay, so my long position limit is 10,000, short position limit is also 10,000 on the entity based level. This is in crores. Okay, so long position limit is 10,000 crores. The short position limit is also 10,000 crores. Let's say I have a long position of 10,000 crores. I have a short position of 8,000 crores. That means this is the gross positions that I have. So my net position limit is 2,000 crores. Okay, so the net position limit for each entity shall be 5,000 crores for the intraday index options, and for the intraday index options, the intraday gross position limit is 10,000 for the long position and 10,000 crores for the short position also. That is the idea. Any confusion, anyone? Next is the aforesaid intraday limits shall continue to be monitored by stock exchanges, that the limits are being followed by the entity. So these are the entity based limits. You can understand that the big entities, the futures and options, this market, usually the big entities are the ones that are trading in this market. Okay, that's why it is said that the retail investors, they should not get engaged in the futures and options market if they do not have the complete understanding, because there are the big entities, the big institutions that are trading in this future and option market, especially the index options. So big entities are the ones that are trading here, so they have the huge limits also, like the 5,000 crore is the net position limit for the intraday index positions, and gross position limit for the intraday index options is 10,000 crore. Okay, so you can understand that huge entities, big entities are trading here in the index option intraday market. For each entity, these are the limits. Now, the aforesaid intraday limits shall continue to be monitored by stock exchanges. Who has to monitor the limits are being followed or not? Stock exchanges has the responsibility. Now, through a minimum of 4 random snapshot during the trading day. So, when the trading day starts and before the closing of the trading day, 4 snapshots has to be taken. That okay, in these 4 time period or in this 4 time in the trading day, were the limits being followed or not? Okay, including one snapshot between 2:45 hours to 3:30 hours, that is around market closing time, where heightened activity is generally observed. So basically, stock exchanges are the ones that are given the responsibility to watch that the intraday limits are being followed in the index option market or not. Okay, now the stock exchanges has this responsibility, and they have to have a minimum of 4 random snapshot during the trading day, that in this 4 times the limits are being followed or not. So that will be random. Okay, now at least one of the snapshot or one of the monitoring time is defined to be between 2:45 to 3:30, that is during near to the closing hours, when heightened activity is there, when usually the entities are closing off their or squaring off their position, okay, or they are buying and closing the position in a very faster manner. The stock exchanges shall consider the underlying price, that is the price of the underlying asset, that is the current market price of the underlying asset. So if bank nifty is the index, so it is said that the stock exchanges shall consider the underlying price, that is the current market price of the underlying asset at the time of taking the position snapshots. Okay, so the current price has to be considered. Now, entities shall be allowed to take additional exposure against holding of securities or cash equivalent. So option, this is for a specified time period. Okay, that's, let's say I have got the option today in the morning, and after like 3 to 4 hours the market is going to close, so I have to square off my position before the end of the closing period, right? So I have the option for 3 to 4 hours. So basically you hold the option for certain time period in the trading day. Now, entities shall be allowed to take additional exposure against if they are holding the securities or the cash or cash equivalent to handle the option trading and such. Okay, so they can take the additional exposure also. Now, for the entities breaching the aforesaid limits, so if they are breaching the limits, stock exchanges shall examine the trading patterns of such entities, which would inter alia include seeking rationale for such position from the clients. Basically, if you are breaching your limits, why have you breached the limit? What was the reason? What was the rationale of breaching the limit? Why you have breached the limit of the long position? You have the 11,000 crores of the long position contracts when only 10,000 crores is allowed. So why you breach the limit? The rationale will be taken, and the trading pattern of the entity will be seen that has broken the limit. Okay, examining the trading in the constituents. Let's say I am trading in bank nifty. At the same time, I'm also trading in the options for the State Bank of India or Punjab National Bank or the different banks, ICICI Bank and such and such. So I'm trading in the bank nifty also. I'm trading in the constituents. Constituents of the index means the entities that are under the index. Okay, so bank nifty consists of the banking entities in our country. So the examining the trading in the constituents of the index by the entity. So basically, if there is the breach is happening of the aforesaid limit by an entity, the stock exchanges will see and will seek the rationale that why this breach has happened, as well as what is the trading pattern that this company or this entity is following, as well as if the entity is trading or is investing in the option for the bank nifty. So has the entity also invested or has the entity also taken the option for the constituents of the index? That means there is some manipulation is happening. If the entity is taking huge positions in the bank nifty also, as well as in the banking companies also or banking entities also, that means there is manipulation that might be going on behind the closed doors. Okay, and discussing such instances with SEBI. So stock exchanges will discuss this with SEBI in the surveillance meeting also. So this is the idea that if breach happens, so these are the steps that the stock exchanges will be taking. Now on the day of expiry of the option contract, now let's say that you have bought the option contract in the morning of Tuesday. Now the option contracts are usually weekly. So even though you are taking the intraday position, but the option contract is going to expire on Thursday, let's say. Okay, so usually the index options which have a monthly expiry, they expire on the last Thursday of every month. Index options that have weekly expiry, they are scheduled to expire every Thursday for Nifty and Bank Nifty contracts. So this is the idea that even if you are taking the intraday position, it doesn't matter that the option contract is finishing on your day. Okay, it is expiring on like the weekly contract expires on Thursday and the monthly contract expires on the last Thursday of every week. Okay, so you are closing off your position, you are selling off the contract, but it doesn't mean that the contract is expiring on the same day. It expires on the Thursday. So on the day of expiry of option contract, the breaches of aforesaid position limits shall additionally attract penalty or additional surveillance deposit as decided jointly by the stock exchanges. So first of all, if there is the breach that is happening of the aforesaid limit, then the stock exchanges will take certain steps. They will examine the trading pattern of the entity that has breached the limit. They will also seek rationale that why the limit have been breached. They will also examine the trading that the entity has done in the constituents of the index, that is the companies that are coming in the index. If it is in Nifty 50 index, the top 50 companies are coming in the index. If it is a Bank Nifty index, the top banks are coming in the, or the banks are coming in the Nifty 50 index. Okay, so the stock exchange will also examine the trading in the constituents of the index by the entity and discuss such instances with the SEBI. Then on the day of the expiry of the option contract, when the option contract is getting expired, so on Tuesday I bought the contract and I squared off, I closed my position on Tuesday only. Okay, before the closing time period, but this option contract is getting expired on Thursday, as this is a weekly contract. Okay, so on the day of the expiry of the option contract, the breaches of the aforesaid position limit shall additionally attract penalty on the entities. So penalty will be taken from the entities. Additional surveillance deposit can also be taken from the entities that have breached the aforesaid limit as decided jointly by stock exchanges. Any confusion? Any confusion, anyone? No, entity here means the financial institutions, the companies that are taking these positions, that are buying the options, that are selling the options. Okay, those are the entities now that are taking this position. So the aforesaid framework shall be restricted to index options only, that I have already told you. Any confusion, anyone? There were end of the day limits that were present, but the intraday limits have been introduced. This is the new framework that has been introduced. Okay. Now, the stock exchanges and clearing corporations, they are advised to prepare a joint standard operating procedure detailing modalities for intraday monitoring in line, that how the intraday monitoring they will be doing, what will be the steps that they will take and such, with the instant circular, and submit the same to SEBI within 15 days from the date of this circular. So basically a standard operating procedure has to be prepared by the stock exchanges with the clearing corporation within 15 days of the release of this circular. The provisions of the circular shall come into effect from October 1, 2025, that is from the next month, as well as the 4.7 point, that is on the day of the expiry of option contract, the breaches of aforesaid position limit shall additionally attract penalty or additional surveillance deposit and such. This point particularly in regards to the penalty, this will come into effect from December 6, 2025. So penalties will be taken or penalties will be levied. They will come into effect from December 6, 2025. The market infrastructure institutions, that is the stock exchanges, clearing corporation, depositories, they are required to take necessary steps to put in place system processes and monitoring mechanism for implementation of the circular, including necessary amendments in their relevant guidelines, rules and regulations. Okay. Yes, entities are basically big players, the financial institutions, the big institutions that are buying or selling the index options. That's why there is the limit now. There are the intraday trading limit on the index option, the entity level. How much long position they can take, how much index options they can buy, how much short position they can take, how much index options they can sell, as well as net position limit is also there. Okay, that is the net of long position minus the short position. Okay, so this is the entity wise limit, that a single entity that is trading in the index option, how much positions they can take, how much of the trade they can do basically. Okay, so that they are not manipulating the market. Okay. So now IPFA launches Inveshak Didi Phase 2, an initiative accelerated for financial literacy of women by women. Of women by women. Okay. The Investor Education and Protection Fund Authority, under the aegis of the Ministry of Corporate Affairs, so the IPFA, under the Ministry of Corporate Affairs, has successfully launched Phase 2 of its flagship financial literacy initiative, Niveshak Didi, at Hyderabad. Okay. So this is the idea. Now, basically in 2022, so this is the Niveshak Didi Phase 2. So Niveshak Didi actually came into being in 2022. Niveshak Didi initiative, this was launched to promote financial literacy by the women for the women. Okay, so Niveshak Didi, this was the initiative that was launched in Jammu and Kashmir. This was launched in Jammu and Kashmir, and it promoted the financial literacy and by the women and for the women. So Niveshak Didi initiative is based on the ideology of women for women. As rural area women, they feel comfortable to share their queries with the female itself. Okay, so basically in the rural areas, if the financial literacy has to be spread, so women have to be trained so that they can spread the information and the knowledge to the other women in the rural areas. Okay, because you can understand that the women are not very comfortable in like they are usually rural women, they are usually not confined to their houses, but they usually are working in their houses and they are usually working in their fields and such, and they are not comfortable in talking to the outsiders or the outside men and such. And if the trainers are sent from urban areas, they will not be able to connect with the rural women. Okay, so that's why it was said under the Niveshak Didi that we are going to train the rural women so that they can inform the other women in their villages, in their area, so that they become financially literate. Okay, so that's why Niveshak Didi, it is having the tagline by the women for the women. Okay, so initiative is aimed at deepening the financial awareness and empowering rural communities, particularly women that usually are confined to their houses, or they are usually working their houses and such. The launch was marked by a financial awareness camp held at Patelguda Panchayat in the presence of Miss Anita Shah Akera, CEO of the IPFA, and Sri Krishna Kumar L, region head of the India Post Payments Bank of Telangana Circle. So basically the launch of the Niveshak Didi Phase 2 was marked by the financial awareness camp that was held at Patelguda Panchayat, and this is in Hyderabad. Okay, so trainers are usually women, and they train the rural women and they inform the rural women. So trainers are usually women that try to train the rural women and they inform the rural women. So trainers, they are women. So Niveshak Didi Phase 2 program builds upon the success of its first phase that started in 2022. So Niveshak Didi Phase 2 program builds upon the success of its first phase by expanding the outreach, introducing more interactive training modules, and collaborating with grassroots organizations to maximize the impact. It particularly focuses on women-led financial empowerment, savings, investment, safety, prevention of frauds, and the use of digital platforms for secure transaction, as well as regional languages are being used. So that because many of the women, like I come from a village that is Rudraprayag, let's say. So in that area, most of the people speak Gadwali. There are also Kumaoni regions in which the people speak Kumaoni. So usually in the village area, the women, they speak their own tongue. Okay, they speak Gadwali only, or they know Hindi, but they know very little Hindi. So if someone is sent from the city level who is only speaking Hindi, so maybe the rural women will not be able to understand the things that the person is trying to say. Okay, that's why the regional languages are also used, and that's why the regional people are trained so that they can inform the women about the different things about the financial literacy, and they can make the people or the women more financial literate. So the regional languages are also being used under the Niveshak Didi Phase 2 initiative. Any confusion here? So basically IPFA, it is the Investor Education Protection Fund Authority. Investor Education Protection Fund, this is the fund. Let's say that if there are unclaimed dividend, if there is unclaimed shares, if there is unclaimed interest rate, if there is unclaimed interest rate on the bonds, if there is unclaimed bond, so all of this, if it is unclaimed for 7 years or more, it goes to the Investor Education and Protection Fund, and Investor Education and Protection Fund is looked after by the Investor Education and Protection Fund Authority. Okay, so for administration of the Investor Education and Protection Fund, Government of India has on 7th September 2016 established Investor Education Protection Fund Authority under the provision of Section 125 of the Companies Act 2013. Now the authority is entrusted with the responsibility of administering the Investor Education Protection Fund, make refunds of shares, unclaimed dividends, mature deposits, debentures, etc. to investors to promote awareness among investors. And to promote awareness among investors. So IPFA promote the awareness among the investors also. And the IPFA has launched the Niveshak Didi Phase 2 at Hyderabad. This is the first awareness camp under the Niveshak Didi Phase 2 has been launched at Patel Guda Panchayat. And the tagline of Niveshak Didi is by the women, for the women. Okay, and here the women trainers go to spread the financial literacy in the rural areas. That is the idea. Now, this is the first question. I hope you will be easily able to answer the question. Okay, so read the question very carefully and try to answer that which of the following statements is or are correct in this regards. Now, before moving forward to the second question, let me show you that if you go to edutap.in, you can go to EduTap's website, where in the courses section you can see the different courses. Let's say you want to see the RBI Grade B courses. So here you can see that there is 74% off that is going on, and you can use the code GURU74, and this is valid till 6th September 2025. If you want to see the courses, that what all courses you are getting, so you can see that okay, there is the live crash course that is going on. So RBI Grade B 2025 live crash course has been launched for phase 1 and phase 2, where you are getting live classes, solve PYQs, chapter wise tests, full length test. There is also the test series. There is also the gold course and silver course. Gold course is for phase 1, phase 2 and interview. So till the interview we will be providing you the material, that is live classes, concept notes, summary sheet, mock test, interview sessions and such. If you are very confident in phase 1 that your quant, reasoning, English is good, you are going to prepare for GA and such, so you can take the silver course. Here you will get the current affairs material, because for sure it comes in phase 2 also. So but quant, reasoning and English material you will not get, because this is phase 2 plus interview material. So here you are going to get the live classes, concept notes, summary sheet, mock test and such. Okay, so here you can see the different courses, and you can see that there is flat 74% off that is going on if you use the code GURU74. Okay, so this is the idea. Now this is the first question that I hope you will be able to answer. Coming to the second question, very easy, that the Niveshak Didi phase 2 has been launched at which city basically. So try to answer this question. So there is, as I've told you, that there is Teachers Day sale that is going on till the end of the day today. That is 6th September 2025 is the last day for the validity. You can use the code GURU74, and there is flat 74% off that is going on. Okay, so this is it, and you will get the PDF in the Telegram channel. Ma'am, we do not have to remember names for signatories for these exams, do we? No, okay, no. If you're talking about the names of these, no, you do not have to remember it. Okay, here just remember Patel Guda Panchayat, Telangana. Okay, unclaimed deposits goes to Deposit Education and Protection. Yes, Guru Raja, correct. So basically the unclaimed deposits from your deposit accounts, they go from your deposit accounts or from your savings account or from your fixed deposit account or any of the account that is in the bank. So your unclaimed deposits go to Depositor Education and Awareness Fund. But if there is the money of the investors that is held by the companies and such, so that is unclaimed for 7 years, that goes to Investor Education and Protection Fund. Okay, so unclaimed dividend, unclaimed interest of the bonds, unclaimed maturity amount of the bonds, unclaimed shares and such, they go to Investor Education and Protection Fund. Unclaimed deposits, they go to, or unclaimed deposits and that is kept in the unclaimed accounts, inoperative accounts, so that goes to Depositor Education and Fairness Fund if it is unclaimed for 10 years or more. Okay, now if you want to get the PDF of the session, you can get the PDF of the session in the Telegram channel of EduTap, the link of which is provided in the description box below. Okay, so get the PDF from the Telegram channel. The link for the Telegram channel is provided in the description box below. Thank you everyone. Any confusion, anyone? You are most welcome, Yukta. Good morning, Fruity. Good morning, everyone. So thank you everyone. Thank you for joining. See you in the next session. Okay. So thank you everyone.